If you've been wondering which index fund is the best for growth and simplicity, then stick around to the end of the video because I'm going to share my opinion on which fund I actually invest in. This fund is talked a lot about in the FIRE community, Financial Independence Retire Early, but I feel like a lot of people don't really understand exactly what they're investing in when they invest in this index fund. And we should know what we're investing in and why we are investing in it. I am Tiffany Thomas with wealthytiffany.com, and I have invested in this certain index fund plus real estate to help me become financially free at age 38. So before we dive in, put in the comments if you can guess which index fund you think I'm going to mention, and don't forget to hit the like button and the subscribe button. All right, my choice for the best index fund overall for growth and simplicity is the Vanguard Total Stock Market Index Fund. And I'm going to share the main reasons why I've chosen this fund and why I haven't chosen some of the other funds. The first reason is because it's very easy to invest in this fund. You can set it and forget it pretty much. And if you don't know what an index fund is, it essentially tracks something else. So the Vanguard Total Stock Market Index Fund is tracking the total stock market, essentially. There are about 3,500 stocks inside of this one fund. So when you purchase one share of the Total Stock Market Index Fund, you're purchasing over 3,500 stocks. But the catch is you're not purchasing one share of each individual stock. When you invest in the Vanguard Total Stock Market Index Fund, and I'm going to abbreviate it VTSAX because that is the ticker symbol for this index fund. So when you're investing in VTSAX, you are essentially investing in the total stock market, but you're not investing equally for each stock that is in the index fund. So let me show you what I'm talking about. I went to Vanguard's website and pulled up the Total Stock Market Index Fund. And if you scroll to the very bottom, you can see exactly which stocks are being held within the fund. And you can see that they are weighted for each sector that they're invested in. So you can see over here on the left, all of these different sectors. And the highest one is the technology sector. It is 27.8% of this index fund. And you can see the top 10 holdings inside the index fund. So you have Apple, Microsoft, Amazon, Alphabet, which is Google, Facebook, and so on. And it's weighted, so you actually are not investing equally in each stock. This means that the S&P 500 index fund that you could also invest in is very similar to this total stock market fund because of the way it is weighted. And I went ahead and pulled up the Vanguard 500 index fund. So it tracks the S&P 500. And if you scroll to the bottom again, you can see that this one also has 28.7% invested in the information technology sector. And you can see the top 10 holdings: Apple, Microsoft, Amazon, Alphabet, which is Google, Facebook, and then so on. So it's going to have a very similar return as the Vanguard Total Stock Market Index Fund. So when investing in a total stock market index fund, don't make the mistake of thinking that you have a fully diversified mix of large cap stocks, mid cap stocks, and small cap stocks in one fund. Since these funds are cap weighted, which I just showed you, a large percentage of the holdings are large cap stocks, making the performance similar to an S&P 500 index fund. I know a lot of people like to invest in the S&P 500 index fund, and that is totally fine. I just like having that little bit more diversification with the Vanguard Total Stock Market Index Fund. But I just wanted to point out that the S&P 500 index fund is still a good investment, and you'll get really close returns to the total stock market index fund. All right, another reason that I love this fund is because it has a really low expense ratio. And I have done a video before about how much fees are really costing you. So check that video out. I will leave a link above and below in the description so you can really understand how much you're really paying in fees and why you want to keep them as low as possible, especially our expense ratios. So with the Vanguard Total Stock Market Index Fund, it only has an expense ratio of 0.04%, which is super, super low. And if you're thinking, oh, Tiffany, I have heard that Fidelity has 0% expense ratios for some of their index funds. You are correct. But this brings us to the next couple of points. We also want to keep our investments tax efficient, especially if we are investing in a brokerage account where we will have to pay taxes when certain investments are sold. Vanguard's funds have been so much more tax efficient that they completely wipe out the expense ratio savings of Fidelity for their 0% expense ratios. And here is some quick math to show how much the added taxes skew the true expense ratio of Fidelity's zero funds. The zero funds distributed 32 cents per share of capital gains last year. Vanguard distributed 0 since the year 2000. So you can see how tax efficient Vanguard really is. And say you have $10,000 to invest and the average share price was $70 last year. You'd own 142.86 shares, meaning you'd receive $45.71 of capital gains distributions. All else being equal, you'd owe taxes on those distributions at your capital gains tax rate, which would be 15% for the majority of people. That's $6.86 of capital gains taxes owed. Relative to your $10,000 investment, that's a 0.068%. In other words, Fidelity's true expense ratio is about 0.07% compared to Vanguard's 0.04%. And if that was at all confusing, just realize that you need to have tax-efficient investments. And when something is sold, so when they switch out a certain stock from that index fund, then you're going to pay a capital gains tax on that investment that was sold. So you want to be paying the least amount in taxes. But since it looks like Fidelity has you paying more in taxes, it averages out that essentially you're paying a 0.07% expense ratio versus Vanguard's 0.04%. So in essence, it's not really a 0% index fund when you're comparing it to Vanguard's fund with a 0.04% and $0 in that capital gains tax. And I understand if you are holding your investments in a retirement account like an IRA or a 401k, then you're not going to continue to pay that capital gains tax because your taxes are deferred depending on which retirement account you're invested in, or you've already paid taxes on that money. But for those of us who are investing in a simple brokerage account, we are going to pay taxes on any of those sales. And another point that I want to bring up is that Vanguard has been in business for a really long time, so they are a very stable company. John Bogle founded Vanguard in 1975 with a unique ownership structure. Rather than being publicly owned or being owned by a small group of partners, the company was owned by its mutual funds, which in turn were owned by the people purchasing shares in those mutual funds, which is you. That ownership structure was purposely chosen so that business profits could be passed on to regular investors like us in the form of lower fees rather than going to third-party shareholders. So you can see that Vanguard has this structure set up that they are not incentivized to raise their fees, to raise their expense ratios. And since Fidelity is not set up like Vanguard, they don't have that same ownership structure, they could increase that expense ratio from 0 to whatever they wanted to, because that's how Fidelity is set up. They want to make more money, and they do that by increasing their fees, increasing their expense ratios. And I'm not saying that is going to happen, I'm just saying it could happen. So I prefer to stick with Vanguard because they are really focused on their customers, on you. The next reason, and I feel like this one is a really important reason for most people, and it should be, it is performance. And the Vanguard Total Stock Market Index Fund has a really great performance rate. So I pulled up the Vanguard Total Stock Market Index Fund again, and we are going to click on Price and Performance. And then we are going to scroll down and we can see what the performance has been for the past 10 years. So you can see that the 1-year performance was 14.99%. Their 3-year performance was 11.64%. 5-year is 13.68%. And then 10-year is 13.48%. And you can see since it was started, it's been 7.18%. So these are really good returns for this index fund because it is so simple to invest in. You definitely won't see these returns by leaving your money in a savings account. You get to invest in one fund and have access to a whole bunch of different stocks, and you can just continue to invest in it over time. And you can also automate this. Vanguard has it set up so you can do auto transfers if you wanted to transfer directly from your checking or your savings account, or even from your paycheck. If your employer allows it, then you can just do an automatic transfer and have it go directly into VTSAX, which I think is really smart because if people are transferring their money to their retirement account or their brokerage account, sometimes they forget to actually put that money into an investment. And it just sits there in their settlement fund account, which is earning probably maybe 0% or barely above 0%. But with the Vanguard Total Stock Market Index Fund, you can just do an auto transfer directly into that fund, whether it's in your retirement account or your brokerage account. So it makes it really, really simple to invest your money. And you don't have to worry about one stock tanking and losing all of your investments because there's about 3,500 stocks that you are invested in. And of course, it is risky because it is all in stocks, so it's going to go up and down over time. But as I've talked about before, the stock market continues to rise over time. So it'll go up and down, up and down, up and down, but it'll go further up over time. Another great reason that I like this fund is, yes, you have to have $3,000 to get started investing in this fund, but there is an ETF version, an exchange traded fund version of this index fund. So you can get started investing in this fund, the ETF version of it, for about $173, which is just one share of the Vanguard Total Stock Market ETF. And if you wanted to, once you have $3,000 already invested, you could switch that over to VTSAX and then set up your auto transfers. The downside of investing in an ETF is they do not allow auto transfers, but it doesn't mean that you can't log into your account and make the transfer yourself. And just as a side note, I was doing a lot of research to figure out if this really was the best investment. So I looked at quite a few different funds and I looked at the return over the years and what their expense ratio was, because some funds seem to have a really high return, but they also have that high expense ratio associated with them. So you really want to be careful when you are comparing different funds. Make sure you are comparing that expense ratio with the performance of the fund. And I thought I had found a fund that could be better, but it's really hard to determine that because it's just based on past performance, but you don't really know what's going to happen in the future. You think it will be similar, but it may not be. So I personally like sticking with a fund that still gets really good returns and has a really low expense ratio. I feel like that is a win-win. And even if I do miss out on a little bit extra return with a fund that has a higher expense ratio with a higher performance, I'm okay with that because I know over time the total stock market will continue to rise. And by investing in this Vanguard Total Stock Market Index Fund, I know that my investments will continue to rise and I can keep my expenses really low, that expense ratio really low. But I still feel like I'm getting enough reward with my risk because I keep that risk low by having a really low expense ratio and can still get the reward, that higher return. Tell me in the comments below what your favorite index fund is And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And don't forget to hit the subscribe button to subscribe to my YouTube channel. And don't forget to hit the little bell to get notified on when I post new videos. Thanks so much for watching. I'll see you in the next video.